My name is Rob. I organize Idea to IPO. We've been doing events in Silicon Valley for many, many years. We hold events multiple times a week from San Jose to San Francisco. We always have a busy, busy calendar of events. We have an event coming up this week, later this week, I'd like to highlight. How to raise money for your startup. That's Thursday, January 31st, up in Palo Alto. Check out the details for that event and all of our events on our website, ideatoipo.com. We launched officially on February 1st, 2010. At that time, we had no members and no events on our calendar. At this stage, we have over 60,000 members among all our meetup groups in the Bay Area. Not yet. We've completed over 1,995 events. By any standard, by any measure, we're the most active, most prolific startup event organization in Silicon Valley, bar none. Now, is that it? Well, let me expand on that. If we're the most active, most prolific startup event organization in Silicon Valley, and Silicon Valley is the global center of entrepreneurship and innovation, that would make us the most active, most prolific startup event organization in the entire world.
There you go.
It's a little better. That's okay, I'll take it. Our mission is to promote entrepreneurship, support entrepreneurs, build community, and provide value in the Silicon Valley startup ecosystem. To that end, we provide content that is practical, actionable, and relevant, stuff that you can actually use to succeed as entrepreneurs. We believe in building community because Silicon Valley is an aspirational ecosystem. It attracts people from all over the world who come here to do great things. Who here is not originally from Silicon Valley? Who here was born and raised in Silicon Valley? All four of you guys, cool. Well, welcome. So whether you were born and raised in Silicon Valley or just arrived last night, it's important for us to provide multiple channels for you to meet people, build relationships, and grow your network. So in addition to our content-oriented events throughout the week, we also have some social events. And they're hosted by one of our team members, CJ Terrell. So let's hear it for CJ. Applause.
Hey everyone, I'm CJ. So as Rob mentioned, we have these social mixers. We call them TGIF mixers. They're over at the Hyatt Regency in Santa Clara, or across the street from Levi's Stadium. Our next one is going to be this Friday. It's a pre-Groundhog Day, pre-Super Bowl party sort of get-together. So if you're in the area, we recommend you come out. They're free. They start at 8 p.m., and we always get a really good showing. I see a lot of faces here from those who have attended our previous events. So again, hope to see you there. It's just, again, casual, no agenda, just kind of get to meet people who are flying into the area, who are passing through the area, who live here. And so again, this Friday, 8 o'clock, Hyatt Regency in Santa Clara. Hope to see you there. I'll pass it back to Rob. Enjoy.
By the way, my birthday is on Groundhog's Day. Yeah, that's too much information. With regard to value, it is important that we provide value at each and every one of our events. Not just value for your money, which is important, because we know many entrepreneurs are struggling financially. So we make sure that our events are affordable. And if you cannot afford the cover charge for whatever reason, come talk to me and we can work something out. And at each and every one of our events, we make sure we have a delicious buffet meal. Is that a delicious buffet meal? All right, all five of you like that. That's awesome. Well, I'd like to thank the law firm of K&L Gates for sponsoring that delicious buffet meal. So let's hear it for K&L Gates.
Thank you.
More importantly, though, at each and every one of our events, we want to make sure that we provide value for your time, which is your most valuable resource. Anyone here getting any younger? Besides our panel? So when you invest your valuable time to come to our events, we want to make sure that you maximize your ROI. We have many, many partners that help us do what we do. Law firms, venture capital firms, angel investor groups, incubators, accelerators, colleges, universities, co-working spaces, lots of other players in Silicon Valley. Tonight, we're grateful to Mindrome for hosting us at this beautiful venue. Is this a beautiful venue? Yes, it's a beautiful venue. So let's hear it for Mindrome for hosting us tonight. Eunice, the manager, had to leave early, but if you have any questions about Mindrome, come talk to me and I'll connect you with him and you can find out what goes on here. We have a few other partners here tonight. I would also like to have them come up and say a few words. Let's hear it for Michelle and Robotics for Good. Applause.
Hello, I'm the founder of Robotics for Good, a Facebook community. It talks about AI messaging and chatbots. I founded a couple years ago before AI became a trend. Really thinking that we should talk about bias and how do we create products that consider bias and social impact. And I thought it was kind of important that we speak about those issues before we create the product. So hopefully you will join, and I'll see you there.
All right, next up we have Christian from Optimal Asset Management. Applause.
Thanks, Rob. Great to see everyone. So quick show of hands. Who here in the room is either a founder or planning to start a business in the future? Awesome. So whether you have 2 people working for your company or more than 200 people, your employees are going to have goals between now and when they retire. At Optimal, we manage more than $700 million, and we've taken everything we've learned from our institutional platform to build a goal-based online investment platform that every individual and every employee can use. With the power to set downside floors and upside targets using the same strategies we offer to our multi-billion-dollar clients, we can help your employees and everyone on your team achieve their dreams. We're announcing our B2B fintech platform tonight called Optimal for Business. It's right behind you. Come check us out. I'm Christian Perry. I'm here with Vijay, Monty, and Armand from our team, and we'd love to tell you more about it. Thank you so much.
All right, next up we have Hymanen from Neighbor. Applause.
Hi, good evening, everyone. I'm Hymanen. How many of you think the Neighborhood Watch program is broken? And there's a lot of crime around here. So what Neighbor is trying to do is implement a better Neighborhood Watch program using AI, video analytics, and deep learning to learn about your neighborhood and understand how we can better serve your neighborhood with better safety and security. So if you're interested in, talking to me, please come by my booth. It's right behind. Thank you.
All right, next up we have Eero from Valohai. Applause.
Hi, yep, I'm Eero from Valohai. We're a deep learning management platform. We help companies that build custom deep learning models do it about 10 times faster than they're doing it today. If you're interested and if you're working with deep learning, come and see the demo. Thanks.
All right, CJ has another announcement, so let's hear it for CJ. Applause.
Hey, this will be my second and last time, I promise. So I also manage marketing at a venture studio in Menlo Park. It's called Boot Up Ventures, for those who are aware of it. So if anyone interested, I know there's a lot of founders out here tonight. If you're interested in pitch events, if you're interested in acceleration, growth, that sort of stuff, let me know. We'd love to connect you to our ecosystem and see where we can help you grow. Thanks.
So though our local mission is to support entrepreneurs here in Silicon Valley, our global mission is to democratize entrepreneurship and innovation all around the world. To that end, we have a robust YouTube channel, youtube.com/idea-to-IPO. Go check it out. We have tons of videos there. We've documented and archived many, many of our events. And this rich, valuable content is available on demand, anytime, anywhere, totally free of charge. Whether you're in Santa Clara, Palo Alto, San Francisco, Maui, Moscow, or Timbuktu. Our partner in this endeavor is Tim Jeggers of Jeggers Films, one of the top professional videographers in Silicon Valley. Let's hear it for Tim. Applause.
Thank you, Rob. Thank you, Rob. Thank you, everybody. So I'm Tim Jaggers of Jaggers Films. I run my own video production company. I specialize in events, mostly corporate, real estate. I do a ton of weddings. If anyone's getting married, congratulations in advance. And other than that, just lots of informational stuff. And if you have questions about any of that or where to find this content and the rest of the content we've been producing, I'll be back there and I'll be around throughout the rest of the night. So feel free to come say hi and ask me whatever might be on your mind. And I'll give it back to Rob. Thank you, guys.
So here's the schedule for the rest of the evening. Our panel will have a spirited, informative, entertaining, exciting discussion, right?
Argument.
Right. And audience members, hold your questions at 8 o'clock. We're going to open it up to the audience to ask questions. We're actually going to do this very efficiently. We're going to form a line here, and we would like you to use the microphone. At 8:30, we're going to wrap up the formal program. You can stick around, network, socialize, and connect. As a courtesy to Mindroom, we would like to leave the building at 9 p.m. And if at any time during the program you would like to get up and get some food or use the restrooms, it's okay. It's a very informal atmosphere. I guarantee you it will be a very hot night tonight. So without further ado, I want to pass this off to our moderator. He is one of the top corporate and startup attorneys in Silicon Valley. He is a partner at the distinguished law firm of K&L Gates, and he is passionate about helping entrepreneurs succeed. So let's give it up for Stan Lomondowski.
So good evening, everyone, and it's my honor and pleasure to be spending this evening with you. And we have wonderful panel of 3 distinguished panelists that will be sharing this evening with us. So before we go into the formal, entertaining part, and very exciting one, I would love to run a quick survey of who we have. We've learned about some startup founders already, but let me ask more specifically, do we have anyone who is an AI startup founder? And now, can you hold those hands and say that you have traction? That's awesome. Now, if you are not, that's just awesome. If you are not a founder but an employee of an AI startup, please let us know. Okay? If you work for a bigger, more mature company, we call this enterprises, please let us know as well. Okay. Anyone works for the federal government that now is in session? All right. Anybody from the academia? Awesome. Other than the panelists, do we have any investors? Perfect. Anyone who is a professional services provider, such as an accountant, lawyer, and other species? Excellent. Any PR folks, journalists, bloggers? So no Twitter tonight, okay. Anybody who has just an idea for an AR startup? Yes. And last but not least, anyone who has just come and wants to learn, because this is the first time you will hear the words AI. Awesome, at least we have one. Perfect, perfect. So the next item on my agenda will be to ask our distinguished panelists to briefly introduce themselves and tell us a little bit about the background, the experience in the AI world, and why they are interested in this space, not any other. Please.
Great, I'll start. Can you all hear me? So I'm Kristen Faulkner. I studied computer science at Harvard, worked as a software engineer for a little while, and then went on to the investing side. Worked at Bessemer Venture Partners in New York for a little while, focused mostly on B2B software, and now I'm at DFJ where I focus mostly on healthcare, and in particular applications of AI within healthcare. So we're looking at kind of medical imaging analysis, improving kind of productivity, and administrative workflows using AI. So that's where my focus has been the last few months.
My name is Nuno Goncalves Pedro. I'm an investor, not with one, but two venture firms, which is odd. I'm with Grishin Robotics, which is a Series A and Series B investor firm here on Sand Hill Road, focused very much at the intersection of the physical and digital worlds. And I'm also the managing partner and founder, because there are also entrepreneurs in venture capital, shockingly enough, and it's much worse than being an entrepreneur in startups, I can assure you, with Strive Capital. And we focus in early stage AI and blockchain investments, and also in very late stage investments, because it's really a family office construct. My experience in AI, I'm a computer engineer. I was fascinated the first time I developed something that beat me 10 out of 10. The game was Connections. It was a basic game, but still I managed to lose it 10 out of 10. I've been a product manager. I've developed analytics engines, the latest of which was actually for Strive Capital Fund 1. We were, funnily enough, a fund that actually derived a significant part of its deal flow out of an analytics engine that we developed in-house, which is a little bit, again, strange and odd, but really fascinating. And finally, as an investor in both these firms and also as an angel investor.
Hi, I'm Erwin Hosono. I'm a partner at a boutique firm called Mighty Capital. It was founded in 2017 by a woman named S.C. Moody. We have three key investment criteria. The first is we want to see a demonstrated product market fit. Second, we love to see an amazing team and West Coast leadership. We are decidedly West Coast at this point in time. Third, we tend not to be the first money in, so we like to partner with larger venture firms, and we love to see revenue traction. So those of you that raised your hand for revenue traction, I'd love to see you afterwards. Our key value added is a group called Products That Count, which is a nonprofit. It's a collection of product managers. There is both an online and an offline platform for Products That Count. Online, there's a newsletter that goes out every week. Offline, there's physical meetings in 5 cities around the U.S., about 50 meetings a year, and about 250 people attend the average meeting. The two sites in the Bay Area are San Francisco and San Jose, so if you have a chance, maybe check out Products That Count. Prior to starting at Mighty Capital, I did private equity work back in New York. Went to graduate school with this fine gentleman right here, Steve, who happened to be out here tonight, and pleasure to be here tonight.
Thank you so much. If I may, I will just add 2 sentences about myself. I am honored to be doing, I think now, the 34th event with Idea to IPO, and I want to thank Rob for having me as part of his family. So thank you, and hopefully we'll have additional years of success together. For those who are completely new to the AI, I want to preface this whole discussion with the following. We'll not be talking about technical terms. We'll try to leave this for people who do this daily and are better than us. We'll express our own opinions, so please treat them as opinions expressed by people sitting at this table rather than entities they or associated with. Otherwise, it will be more difficult to express yourself fully, I guess. And let me start with the following. I want to say what AI is in my own words. Because when I did some research over the last few years, I found more than 10 definitions, and one article simply said, there is no one definition for AI. And simply the easiest one to remember that I like is the ability of a computer program to think and learn like a human. And that's the easiest one for me to remember. When you look at the history and go back to 1950s, some people in 1956 at Dartmouth College with John McCarthy and others coined that term. And since then we have artificial intelligence, but the ideas and concepts go much, much deeper and farther back. And they go to people such as Charles Babbage, Ada Lovelace, and famous Alan Turing. This one, in 1950, published his seminal paper titled Computing Machinery and Intelligence, in which he laid out criteria to assess whether or not a machine could be said intelligent. And that has since become known as the Turing test. So with that background, I would like to ask the panelists to break down the AI into some subsets and share with us which of those areas are the hottest these days, because things have changed over the last few years, and maybe 2019 has better horizon than other years.
I don't mind taking a stab at that. I will go the opposite way. I think it would be easy to talk about machine learning, deep learning, the subsets of deep learning, the subsets of machine learning, et cetera, et cetera. I'll sort of share with you how I look at it as an investor. And as I said, I invest out of 2 different venture firms. So at Grishin Robotics, we look at AI embedded within the concept of the system. We look, as I said, very much at the intersection of the physical and digital worlds. So for example, we have an investment a company you might have heard of called Zoom Pizza that raised obviously $375 million from SoftBank late last year. They use AI in certain parts of their operations, right? So it's clearly embedded in their system of logistics and their systems of food preparation and robotics, et cetera, et cetera. So we look at AI fulfilling a purpose, and you could say, well, but then almost everyone uses AI. Well, a lot of people do. And in that context, we do look at it as part of the stack, and that's basically it. The second piece I would say is really, for me, more of an architectural view. As I said, I'm a computer engineer by background. So for me, there's the apps layer. I think this year we're going to have a lot of cool stuff happening at the apps layer. There's a lot of platforms out there like TensorFlow and others that make these apps more meaningful. You could invest in something that's doing recruiting using AI, but using platforms that exist in the marketplace. I think this will be the year where you'll have a lot of AI investments that will not be named AI, because people will be like, oh, it's just a recruiting facility, whatever, it just happens to use whatever's out there. But I would still say that's AI, because it's still using algorithms on top of existing platforms to extract value out of those engines. And at Strive, we do quite a bit of investments in that space. We actually did an investment last year around a recruiting app. That's why I actually mentioned it. The second piece, I think, is very much the piece around platform. And our thesis around that is that platform, what got us here is not what's going to get us there. And I'm going to simplify a little bit the language. I think we got here through brute force. We got where we are through brute force. A lot of compute, network latencies came down, a lot of data. Right? And we believe strongly at Strive that the next wave is going to be different. We'll require much less data. I think we'll see a lot more what we call the finesse stage, where algorithms will matter again. We do not believe that algorithms have been commoditized in AI. But if you look at the platform layer, some of the more intelligent and savvy people in the room would say, actually, you can't just deliver on the platform. You need to have apps that are killer apps. So our belief is we will invest in companies that are able to put that platform layer together, but at the same time, we'll have 1 or 2 apps that run on their own platform that illustrate traction, that illustrate that it actually works, that there is a purpose to it, which is not just merely scientific. The one area where we don't play at all, or I don't play as an investor, is the infrastructure layer below. Whatever is below, we don't play, right? We're not trying to invest in also the next competitor to TensorFlow, et cetera, or IBM Watson. So that's probably the layer where we invest the least in, and we don't invest any time looking at that. So that's how I would break it down. I know many of you will be disappointed. You expected a great taxonomy around CNNs and in capsule AI and all of this stuff, but basically this is how we think through it in terms of investments.
Anybody else wants to add something?
Back for Mighty, we're sorry. So we're again very product focused. So when I thought about this question, I would think about not what the hottest area is, but what's the area that you have if you're a founder, where do you have founder product fit? Where's a place where you've identified a problem in your workplace where you see an opportunity? So and where you can gain revenue traction. So for us, it's about product, and we're sort of agnostic with respect to space.
Yeah, and I'll just add to that. Great points. I think a lot of people say, like, we use AI, and for me, I care about, is this an application where AI is actually useful? And the second thing is, I think early on, it's really important to have focus, and a lot of AI fails when they try to do too much and kind of encompass so much in the very beginning. And I think having a very specific problem and use case that you're going after is really important. So from an investor standpoint, I think merely having AI does not make your application useful. And so we look at the kind of the quality of data you're putting in, not just the quantity, the focus of the problem, and is this something that actually makes sense to use AI for?
Perfect. So thank you so much for that. Since this is a panel that is supposed to be talking mostly about funding and innovations in the AI ecosystem, I want to jump into the most exciting part that deals with financing of startups, and that will be the majority of our discussion going forward. Based on Stanford 2018 AI Index annual report, the data shows that between 2015 and 2018, active AI startups increased financing by 2.1x versus other startups only 1.3x. Now, in a 4-year period from 2013 to 17, AI VC funding increased 4.5x, while all VC funding increased only 2.08% times. That gives us an idea, at least, that the AI ecosystem, which is part of the software industry, has been growing exponentially. Based on these records, that's a great indication how things are changing. Now, I would like to know from the panelists, what kind of AI startups are mostly being funded these days?
Well, it's easy to say that the big ones are the ones getting the most funding, right? You know, ByteDance got a ridiculous amount of funding. So I think the problem with some of these numbers, obviously they always break down between total number of deals and the total amount put into it, is we've seen that there is capital intensity to things that involve in AI. Maybe ByteDance is not a perfect example of it, but it's certainly a decent example in the consumer space. And so the guys who have traction and scale will need more and more capital, and sort of that drives the numbers. I do think it's true that we are seeing a little bit of a renaissance of people that have stopped trying to reinvent the wheel and really be on top of existing platforms, be it Watson or being something else, which is really cool. I think we're seeing a lot of exciting things, and maybe my colleague here can give us actually a much better view from the trenches on what's happening in healthcare, because I think that's fascinating that there's so much innovation happening in healthcare, a space that historically has been so legacy driven. So for me, I think these numbers are always showing us a pattern that's actually going for a long, long time, and the volume just of capital going to the big guys is just phenomenal. I don't know if some of these will blow up or not. That's the other question I would put at the table, which is if you then raise too much capital, as we're seeing now, and you're at valuations that really you can't withstand, what happens next? And that has nothing to do with AI. It just has to do with the classic logic of valuation in private and public markets that we're in.
So if I switch this question just a little bit and ask closer to the chest, when you look at your funds and organizations you are affiliated with, what companies you mostly invest in?
Yeah, so here we go. So I mentioned in healthcare, we're looking at a lot of medical imaging analysis. So there's companies that are trying to kind of augment the doctor, not necessarily replace diagnostics. Some are doing diagnostics, others are doing decision support tools. But we've seen it with mammograms trying to identify breast cancer. We've seen it with colonoscopies identifying polyps. We've seen it with, we actually invested in a company called Imagen that it helps radiologists identify risk fractures. So it's automating a lot of the decisions that doctors are currently doing for diagnostics. And I think that's really interesting because it's a very defined use case. It's like, is this a tumor, is it not? And there's a finite set of answers, which I think is exactly where machine learning should be applied, is kind of these repetitive tasks. The second thing is there's a lot of access to proprietary data and a really strong feedback loop because it's constantly getting new data as doctors are using this platform. And I think the quality of data is, as I mentioned before, as important as the quantity of data, but also the kind of variety of data. And so in a lot of machine learning algorithms, you use a lot. Sometimes you'll see companies using a lot of the same data sets with very similar images. And it's actually, you want variety to create kind of accuracy around those edge cases, because that can make the algorithm a lot more useful and kind of applicable. And then the final thing is we like to see some kind of defensibility around the company. So that can be a data moat, as I mentioned before, access to data that some of the incumbents don't have access to or expertise in. It can be a regulatory moat. So whether you get FDA approval, whether you have a patent on a technology, or it can even be a market share. I think in machine learning companies or AI companies, the more data you have, the more market share you have, the more data you can get, the faster you can grow and kind of gain more market share. And so sometimes first mover advantage can also be really helpful. So I mentioned kind of having a defensible moat and having a use case that's very specific and purpose driven.
In terms of our investments, so on the early stage side, I mentioned the recruiting company. Very interesting what they're trying to do. They're trying to turn the marketplace of recruiting top talent, in particular, starting with engineering, on its head. Basically, they're saying the most difficult piece is the talent. So how do we get to engineers? How do we figure out the best engineers? What sort of data would we need to have to figure that out? And then how do we bring these people to the workforce, right? And then we can basically go and sell it to companies that want to attract this talent, et cetera. The other investment that we've made, so this is a company called Stellaris. The other investment that we've made is a company called 1.1, which is in the indoor farming space, robotics, so no human intervention inside the indoor farm. I can't go into a lot of details, but they certainly use a lot of computer vision, as you can imagine, within that context, and that's the piece where sort of AI is really excelling. The part that excites me the most, and a little bit back to I don't want to make this my pivot, but back to the healthcare space, is we invested in a company called Everpix a long time ago. And unfortunately, they didn't work out. We had other great investors with us at that point in time. You can go back. This became a little bit the poster child for Series A crunch in the Valley circa 2012, 2013. So there's a lot of information on them. There's wikis on why they failed and why they couldn't raise the Series A, et cetera. And the CTO of that company actually developed an incredible engine for image recognition using semantic search, something that now you guys can do on Google Photos, but he was doing this in 2013. And the funny thing, he went to Twitter, did a bunch of other stuff along the way, and now he's doing a company precisely around, image recognition for radiology, mammograms, et cetera, et cetera. So he decided, how do I make this actually impactful in something that's meaningful to society, which is really, really powerful. So it's not always bad examples of AI. I think sometimes we get great examples as well.
So I'll add to that a little bit. I think what I'm hearing about is they're both large funds that are investing in AI. So I understand SoftBank has a fund that's not the Vision Fund, but that's making investments in AI. I do not know how large that is. I also think we're in a space right now in the medical area where you see a combination of AI used with human at the same time. So when you add the doctor with the AI, you get a better result in terms of figuring out whether there's a tumor or not. And then on the smaller side, looking through the Mighty portfolio, we have 3 companies which I'd say currently use AI. First would be Fabric Genomics, which uses AI to figure out, diagnose and predict rare diseases. The second is a company called Hyper, which is tomorrow going to announce a partnership with Adobe. They used a location-based marketing platform to pick out geosocial data so they can analyze customers and figure out customer behavior. The third is we are investors in Airbnb, and Airbnb has a paper out recently where they showed how they used AI to improve photographs on their website. So pictures of the bedroom, for example, that might have been disjointed or some are aggregated so that you can get a better view of the bedroom because the bedroom pictures are all in one place. 2 small companies that I've invested in as an angel investor, one's called Speak With Me, that uses, it's the first company to try to create an AI cockpit for cars. So they've gone through a long development process to get their product to market. And the second would be, similarly in the HR space, a company called Stella, which has created what they call the world's first shared talent network. They're looking to get companies to invite all their candidates into the Stella network and then let the AI figure out, well, who might fit which job. So, for example, if Chase Manhattan Bank is looking for an employee and Deloitte is looking for a similar kind of employee, that employee might get offers from both organizations or potentially interviews from both organizations.
There's been some interest through the back door, as I would say, to challenge you a little bit and ask you questions that are difficult for some people to hear answers to. And that pertains to first financings, especially where most startups are not disclosing how much they've raised unless there is a good news and everybody shares this. But in most cases, people don't share too much information about the financing terms. If you could share some ideas as to the pre-money valuations for first financings that AI startups experience, and what's the most commonly seen dollar amount of the first round that you can share with us?
It's a difficult question to answer because it depends a lot on the founding team, what access they have to capital, etc. I mean, I've seen as low as raising 250K to 500K on a pre-seed. I would say classically, first institutional money in would come on a pre-seed or a seed at maybe $1 million round, something like that of funding, $1 million to $1.5 million. Pre-money varies wildly. I mean, anywhere from, I've seen, I think maybe the lowest we've gone in something like 3.54 million up to 10, right? But I've seen companies that are heavily dependent on AI that we came in that had, first rounds of friends and family. That's a great friends and family round of 7 million. And got away with an uncapped 20% discount. Only uncapped I've done in my life, I swear to God. But my best angel investment of all time. So it varies a lot, right? But I would say, valuations have gone up for sure, even in pre-seed. I think it's more noticeable in seed and A. In A, it's incredibly noticeable right now. And it's also noticeable that sometimes companies are raising Series A's when they're not at the right time to raise a Series A. They don't have the right traction. They don't have the right sort of push into it. And so in some ways, I think that's where we are. That's where we are today in the landscape.
I'd say fairly similarly. I do believe we're seeing much higher valuations in the last 6 months. Maybe that'll change. I've seen companies come in looking for a $20 million pre-money valuation on very little revenue traction. I've seen others at the seed stage, maybe more reasonably looking at a $4.5 million valuation, raising $250,000 to $500,000.
Yeah, I mean, I've seen it across the board. I think at the end of the day, valuations are calculated on a risk-reward kind of adjusted basis. And so, if it's a serial entrepreneur with a lot of exits, it's going to be a higher valuation out of the gate because it seems a little less risky. Similarly, if you're going into healthcare, they're often going to need to raise more money because they're longer sales cycles. And so there's a lot of nuances. And I would not say it has anything to do with whether the company has AI or not. It's just more the industry that they're in, how much money they're going to need, how far are they from revenue, how risky is it, what's the competitive landscape, all those things that factor into normal businesses are going to factor in. And so, yeah, I've seen companies raise a Series A at, 10 million valuation, 30 million valuation, and a 6 million valuation. So it really just depends.
This is my public announcement. When raising, valuation always matters. It's baggage, right? People always forget that, but you're going to pay for it at some point. There are expectations on that valuation. I've seen companies having to go to flat rounds and down rounds. I'm actually seeing more and more these days, in particular around Series A's and Series B's. And so when you guys say, well, I can take this at 15 million or take this at 25, let's say, do think if you should take it at 15 or 25. It's not a no-brainer to take it at 25. I've seen entrepreneurs actually not get any money out of exits because they made decisions like that early on when they were getting funding. So again, my public announcement, and I'll shut up on that, but just be very, very cautious with valuations.
And if I may add to that one, the deals that you see before the first equity is sold, and that's the preferred one, which instruments do you most commonly see if you could compare what's available? There's not too many, pretty much. There's 3-4 types of instruments, note safes, some fixed instruments, and some other deviations called kisses and others. Which ones do you see before there is a term sheet for an equity round?
Before an equity round. So typically, I think safes are becoming incredibly popular. Obviously, you still have convertible notes. We don't, at Strive early stage, we will do convertible notes. Late stage, we only do equity rounds. And at Grishin, we really dislike convertible notes. I compare that to what I would call, dating, but not getting married for an investor. And if you have an institutional investor, you do want to get married, right? Either have that person on the board observer, et cetera. So in some ways, I think, this movement of safes is positive in general because it's easier, the legal costs go down, but at some point in time, if you have a good institutional investor, even if it's a pre-seed round, and if he wants to do a price round, I think you should consider it. If he's bringing value, he or she is bringing value to the board, et cetera, et cetera.
It's interesting because at Mighty, we won't do safes. We generally do only convertible notes, but we get more and more people coming and asking us to do safes. I have personally done safes on my own.
I see a lot of safes at the seed and pre-seed, and usually convertible notes will be like a bridge round. Is I would say typically what I see, but it varies.
You were saying.
Say aye.
AI failure.
Yeah, just to add to that one from my experience, whenever I work with portfolio companies, and if they watch the idea to IPO presentations from the past, I will try to at least incite them to go and ask for a safe first. If not, they end up with notes which are completely fine. Just within the last few months, there's been something on the market called post-money safe. So it talks about post-money valuation being taken into account, not pre. And I see slowly more and more of those safes showing up on my desk.
Can I say one more thing on
Yes.
that? So given the technology that exists today and the ability to build a company relatively cheaply, I think there's a huge opportunity for founders and for all of you out there to build your company in the lowest cost way possible, get your revenue traction, and then come to look for people like us for funding. I say this because I know these three guys in New York who are in their 20s that are building an education startup. They all live together. So they, and they pay themselves something like $45,000 a year. I know that's not a lot of money for New York. It wouldn't be a lot of money for here, but they, they're living in one place together. They're about to become break even, and so, they'll be able to keep a lot more of their company because they've basically bootstrapped it to this point. So to the extent you can do that, I'd encourage you to think about that before you come talk to the venture investors.
Yeah, and just to go off of that, one thing that we look a lot at is kind of not just growth, but efficiency of your growth. And so how much money is going in to get to where you are and how much, your revenue scale. And oftentimes companies will raise a lot and spend a lot, but then that won't necessarily translate to growth at the early stages. And so I think that when you raise too much, you can run the risk of becoming very inefficient with your growth because you just focus on growth. And I think it's really, really important to show that efficiency early on and that discipline, and it will definitely pay dividends later.
Thank you so much. Knowing that the time is going faster than expected, I'd like to switch topics a little bit and ask you about your view on challenges, growth, and utility when you compare AI for enterprise with the AI for customer.
First and foremost, I think there is one area of the enterprise space that's very similar to the consumer space, which is obviously sort of software as a service, what Andrew Chen would call bottoms-up software as a service, what I prefer calling consumerized enterprise. Consumerized enterprise is incredibly similar to consumer. The dynamics are very similar. The dynamics around retention engagement hacking, which is something I spend a lot of time talking about, which for me is sort of a good variation on the whole growth hacking discussion. So I think those dimensions are very, very similar. So just to split those for a second, I think the exciting piece is where you have very verticalized enterprise applications, right? Either focused on natural resources or healthcare or other industries where there's tremendous value deployed by that. And that area is, lack of a better word, and I'm going to use a politically incorrect term, but everyone in the room will understand. It's very based around elephant hunting in the beginning, right? So the sales process, you can't just do inside sales. You actually have to get some big names and big logos to go after it, right? BHP, on the mining side would matter. If you get 10 guys who are tiny, it probably doesn't. So I think a lot of the dynamics that we're seeing around that are very, very different. the narrow set, the narrow AI that actually is even narrower to some of these industries is very fascinating to me. I think the piece we haven't totally figured out, to be very honest, even I think on the investment side, is really how AI gets deployed to end users in some ways, be it enterprise end users or actual consumers. And we've seen some dimensions of that with a company in Palo Alto, Menlo Park vicinity that has been obviously very heavily discussed, and what happens when you start manipulating things and there are things happening that nobody can actually control. Because we've been talking a lot about humans in that case, but actually I'm sure there's a lot of algorithmic issues in that case that were not fully controlled. So in some ways, I think that's the risk we're running, right? There's going to be risks of privacy because data is available to these AI agents, and they can do whatever they want with that data. And if you give them control over what gets actually made visible to end users, they will do whatever they want as well. And in some ways, I think that's the big issue around what I would call sort of the more the consumerized enterprise, consumer space from an investment standpoint.
Yeah, kind of going off that point, I think one of the things when I think about the difference between consumer and enterprise is I think businesses are much more protective of their data and much more thoughtful about who can use it, how they can use it, who has access to it. I think with consumers, we're used to getting a lot of products for free in exchange for our data, whether that's social media, whether that's Google, whether that's spell check on my phone, like what all of those things. And so, one of the questions I have is, will consumer apps going forward, how are they going to balance charging for things, maybe in exchange for how they use your data? I think the control of data is something that we see in the enterprise much more than the consumer side right now.
One item to add to this topic. I met few founders about a week ago in San Francisco. We chatted pre another event, and the AI showed up, and the enterprise offering that's on the table from big players such as Amazon, Oracle, Salesforce, SAP, and others. The question to me was, and I said, wait, come next week, you will listen what others want to say. Should startups trying to enter the AI offering for enterprises be afraid of the big players investing billions of dollars into research and development and pretty much having already excellent offering for enterprises? Should startups be afraid of that huge hurdle that's already in front of them, or should they, just like in any other industry, go forward, find the niche, and just hope that they will be bought by the big player and integrated into a bigger platform?
I think one thing Nuno mentioned earlier was kind of these vertical plays. So, for example, if you were to, I remember speaking to a company that was like in the restaurant space, like restaurant software, which it's much more niche. Like I don't see Salesforce, Amazon, Google, Facebook, going into that space, but they've built like an incredible verticalized offering, for that niche. And I think in a lot of industries, we've seen that construction, we've seen just like, different industries where when you are much more verticalized, I think you can, get a much greater percentage of that market and have you're not going to be competing with much more of the kind of broader applications of B2B software. So I think that's one angle. And then I think, you can go from there.
And I go back to my initial leitmotif of, it's going to be the year of apps in AI. I think 2019, 2020, where you're going to have a lot of things riding on top of existing platforms, including in the enterprise software as a service space. And, it's just the platform play. They're riding on platforms, but they're developing their own systems. They're developing their own mini sub-platforms, so to speak, that deliver in the marketplace. And for me, that's really, really exciting. So I don't think you should be afraid of it. You should just use whatever's out there and actually ride on it. I mean, when people, I come from the mobile space, when people started using, iOS and Android as their base operating systems, and they were riding on these app stores that nobody really understood, everyone's like, well, but these guys are going to control the world. And now we have companies that have emerged mobile first, mobile apps, some that are doing incredibly well, some that have done incredibly well, maybe now less well, but it created a whole category, not just in consumer, but also in consumerized enterprise and software as a service that will really focus on that as the initial platform.
Excellent. So being mindful of time, robots and AI will destroy jobs. That's a theme that you could see over the last few years in different publications. I'm paraphrasing to some extent, of course, but I would love to know your view on how you perceive the AI disruption in the workforce and the broader economy.
Well, probably a lot of the jobs that will be lost first will be the ones such as maybe hospitality or dishwashing. I think Kai-Fu Lee has a very good graphic on this where he shows which jobs have the least skills and which jobs have the most skills, and the jobs with the least skills will disappear over time. The question is, how quickly is that going to happen? If it happens really quickly, it'll be very socially disruptive. If it happens more gradually, then we can prepare for that. So I don't know. I don't necessarily have opinion on that. There are people who think, like Kai-Fu Lee, that we will have somewhat of a utopian outcome or could have that, and then there are people like Elon Musk who have more of a doomsday scenario. So, I don't think I can opine on that.
I actually had a really fascinating discussion with a friend of mine who's in the public policy government realm, and has been involved in a lot of these discussions with government officials, tech leaders, etc. And I think the honest truth is nobody has a clue. Just literally nobody. I think you alluded to one important thing, which is timing. How fast will this happen? Not just the skills, low skills, high skills, but also highly automated roles or not highly automated roles. I think will have an importance on that. For me, the really cool thing, because I was having this discussion with this person, how do you prepare for it? Because even if tech leaders, and some of them are really intelligent PhDs, almost PhDs, et cetera, if even they don't fully understand the technology that their teams are developing, then how do we have this conversation? I think this is going to be actually a very bottoms-up process, and it should be a very bottoms-up process where there's capital fueled into understanding decisions that are made, even, for example, in the specification of languages that are used for formalizing neural networks, etc. Right? What are the boundaries of those languages? What access and interfaces do they have access to? And this is super bottoms-up, right? But nobody's having those discussions. Obviously, I have a lot of respect for some of the people who have views, and that put money against it, like Elon. But at the end of the day, it needs to be done, I think, very much from the grounds up. And I think we should start working on it right about now. I'm not sure when we will have big disruptions or not, but it's good that we start early, that we understand boundaries of what we're developing early, because as we know, there are still systems out there that have been around for 30, 40 years. I have a system in production for 22 years that I developed, 22 years, and it's running infrastructure in a country, right? It was done 22 years. Thank God it was done using a graphical user interface. But anyway, we need to start working on this stuff. Even if it takes 20, 30 years, the legacy will be done right now. So that's my view, at least, on it. I have no answer. I don't think anyone does, but we should start working on it right about now.
And we should, be doing a better job with Silicon Valley and Washington, D.C., because there's not a great dialogue. And if we don't do it as a partnership, we've already seen the examples of what's unsuccessful. It could be worse if we don't address it.
Yeah, and just going off both of those points, I think initially it'll be a lot of the repetitive tasks that are replaced, but I think it'll take a very long time to replace a large portion of the workforce, and I think that'll give us enough time to kind of change the skills that we are teaching younger people, and I think the skills that are needed will evolve. And so I think kind of what they were talking about is I think we have time and we need to start now in how to respond to the changes that could happen and kind of prevent some of the negative effects that AI can have, whether it is biases, whether it's implications on stratification of wealth and skill gaps. I think one of the things in healthcare at least is in software, there's kind of move fast and break things, and you can't really do that in healthcare because if you move fast and break things, people die. And so, it actually will move slower than I think a lot of us think. These things they need to be tested a lot for a long time, and as we mentioned earlier, a lot of the applications in healthcare are still human assisted. They're augmenting humans right now; they're not replacing humans, and I think that'll be the course for a very long time. We're seeing that in cars. We're not fully autonomous yet. We're human assisted, and that's how it is in a lot of industries. And I think it'll take a long time before humans are completely replaced by machines.
So in the last 2 years, we've had our dose of cybersecurity attacks, and we don't have to go deeper into that one. But PwC, in its predictions for the past year, stated that cyber attacks will be more powerful because of AI, but also cyber defense. What could you tell us about your view on AI and the cybersecurity space? How is AI impacting cybersecurity space these days?
Zero clue. I think this is always the same issue, right? And remember when we were talking about viruses and antiviruses, and for a while it wasn't very clear who was doing the viruses anymore. And so I generally don't know. I think we're going through this brave new world where we will have more and more attacks. We'll have more and more information stolen. We'll have more and more impact into society. I hope at some point that there will be an understanding of what the boundary conditions are, but certainly I'm not an expert in cybersecurity to see who's going to win that battle. And to be honest, I'm not even sure who has an interest in winning that battle, on which side.
Okay, perfect. So I see that clock and already people pointing that we should be ending. Andrew Ng said AI is like electricity. Do you agree with that or not?
No, I don't right now. I think maybe in 20 years it'll be like electricity, but I'm very dependent on electricity in my daily life, and I'm not. I don't feel right now that I am so dependent on AI that I can't live my life without it if I were to take away certain things. At least to the extent that I am dependent on electricity.
I think we're heading that direction. We're getting there. I mean, if I look at this is a little bit of AI for me, right? If I'm a different person with this than I am without it. I can do things, I know things, I go places, I get reminders. So I think we're heading that direction.
I think the issue I have with Andrew Ng's definition of it being like electricity AI is it's sort of saying it's a utility in sort of a relatively commoditized manner, which I don't think it will be for a very long time. And I think we'll see a lot of flavors of artificial intelligence and ways that it gets deployed in. So that's my sort of issue with that definition.
So lastly, what would you want to see in the AI space over the next, not 12 months, 60 months? 5 years, pretty much something that you are thinking about that it's a necessity, but still
I would like
far
it to
away.
I would like to have things in my life as a consumer that it generally just does totally end-to-end for me, like end-to-end stuff. Book me a restaurant, do whatever. So I think it will probably happen in less than 5 years, but like end-to-end utility, I think is what I would like from AI as a consumer. So that's my one contribution.
I'd like to see a closer relationship between Silicon Valley and Washington, D.C. And thinking ahead with respect to how we're going to manage AI from the social disruption point of view, from the national security point of view, from our relationship with China. And I'd like to see that happen.
I'd like to see it become so accurate and people build so much trust in it that it's no longer a question of is it ethical to use AI, but is it ethical to not use AI? I think that is where I would like to be in 5 years.
So thank you so much for this part. And I will pass the baton to Rob at this time.
All right, so we're going to take as many questions as possible from the audience. Who's got a question for the panel? So step right up. We're going to form a line here. We're going to be very efficient about it. Come on, go for it.
So all of your funds probably have like expiring dates or 5 years, 10 years. What are the horizons you invest in startups with thinking? If you look into an AI startup investing now, what are you planning for that startup? When to cash out and when to return?
I think the majority of funds are normally 10-year funds. Then it depends what their investment period is, et cetera, et cetera. So without going into too many details, I think our frame of mind is if it's an early stage investment, we're saying 6-7 years plus that we'll stay in the company. If it's a little bit later, then we're maybe expecting 4+ years. But in all honesty, if the company's doing well, if it's not a zombie, if it's creating value, if it's moving forward, you can do all sorts of things around fund duration, and we have great lawyers that sometimes help us in figuring how do we move that forward. If a company takes 12 years to IPO, it takes 12 years to IPO. I met an angel investor the other day, a friend of mine, and he was very happy because it solved some issue with his own local government, and he had angel invest in this company that finally IPO'd, and that company was Adyen, which I'm sure many of you have heard of, the payments company, and he did, 600x on that investment. 600x. Let's just stop there for a second. 600x. Okay? It took him 12 years, right? I mean, if you're a fund and it's going to be 12 years, you wait, right? Because it's 600x. So I think fund duration for me as an investor has never been an issue. I know some people have had issues in the past and they impose some redemption rights and redemption options, et cetera. But I don't think normally that's the key criteria in some ways.
Yeah, I think, funds have timelines, but at the end of the day, like if you're making a lot of money and you're growing, like, we're not going to cut you off. I think I would worry less about that and more about how can I build this business to grow fast and make a lot of money. I think the timeline will. I don't see a tech company being around for 20 years in an investment portfolio, but I think like at the early stage that is probably less of a priority.
I think where I'm coming from is like, then the belief is that in the next 5 year AI will take off, right? I mean, that's determined from, and that's something we don't know. So, maybe AI will take longer to take off. And so from an investor perspective, how do you do risk? Right? Sorry, I'm not trying to take away.
I think you rarely look at it beyond 5 to 10 years. Like when you invest in the company, you have to have a belief that within 5 to 10 years, there will be a material, and again, if you're an early stage investor, that there will be some material outcome out of it. That has to be your belief as an investor in terms of timing. If I'm investing in something that will only pay off 10 to 20 years down the road, I would likely not invest, right? Because the notion there is it's not ready, it will have difficulty raising money, right? Because then it has no longer momentum to get there, right? I mean, there were a lot of early investments around VR and AR that have sort of gone down the drain because the attach rates of even devices have taken a long time. The platform didn't get there early on. So I think that's at least how I think about it. 5 to 10 year time zone there has to be, or timeline, there has to be some event that happens, right? Now, obviously, we'll be patient if that's not the case. But that's sort of I think the thing to take in mind for an early stage investor.
Just add to that really quickly, and then I'll let the next person go. I think if you find an immediate use case for which there's an acute problem, then you can earn revenue now and you can grow now. And then in problems that are problems in 5 years, you can solve them in 5 years. But I would focus on current problems now and kind of later problems as they come.
Generally speaking, if you're growing revenues and growing customers, someone's going to want to acquire you. So you're most likely, if you've built a product that's taking off, you're probably going to get acquired, and so that becomes a non-issue. If you're not doing well, then it's a different story.
Thanks, guys.
Hey guys, I'm a co-founder of an AR startup, and augmented reality uses a lot of AI and computer vision to figure out things. So just wondering, have you guys seen any interesting startups in that space, or have you invested anything in that?
I've looked extensively at that space, and we do still at Grishin Robotics AR and VR. I think over the years, the way we think about it, and again, without it being like our formal view on the space, we become a little bit more bullish on AR short term, and maybe a little bit more bearish on VR short term. VR maybe will take a bit longer. I think the announcements we've had from Oculus and other players in the market have been really, really positive. But it's all a platform play. It's a little bit like mobile. We're looking for attach rates for people using devices to grow up dramatically. And until it's at some significant scale, it will be difficult for us to see. AR for us, we're very product focused. I haven't talked about this earlier on. You've been the torchbearer for product focused people, but we are very use case driven. So we start from there. We start from the notion, what actual user need is this solving for? And can this be solvable, to your point that you just made right now, within the short term, not like 10 years down the road? But yes, for sure, we look at it. It's exciting, I think, what's going on. I think we're a little bit more bullish on software-driven innovation there rather than just hardware-driven. But it's still a space that's still maturing in some ways.
Thanks.
Thank you so much for the terrific content. So I got two questions. One is about the topic that you mentioned earlier, about the finesse in algorithms. That tells me two things: that you're not really interested about pushing forward the pushing forward things like TensorFlow or Keras or applications like that. You're more interested about algorithms that crunch and curate and process data more to get you to your end-to-end solutions. And with that, we don't want people like Andrew in teams. We want people who are thinkers, who can put things together to create solutions like that. With that in mind, do you care more for revenue or for the structure of the team? And also, my second question is on...
The answer is both.
The answer is both. But there's a problem here, because when you're talking about finesse and algorithms, the way I look at it is that I care about how you synthesize your content to be domain specific and narrow AI, right? So you don't need to create a new bio-STM. You don't need to create or devise a new CNN architecture. What you need to do is find new ways to process data faster in the domain that you're at.
Yeah, and I used an inaccurate word, and so just to clarify the word that I used, I think one is we do believe in part of what you're saying, which is people that are riding on existing platforms that have some algorithmic discipline, that are a little bit more tinkerers. As you're saying, they're not PhDs in math. They don't need to do formal proofing of their algorithms, et cetera, et cetera. So to your point, we believe in that. That for us is sort of fitting the app layer of our architecture. But we do believe there are guys that are going to innovate at platform level, that will need to probably do a couple of things full stack, because platforms won't be, as you were saying, they need to still be narrow, so they need to serve specific apps. And that's where I was using the term of finesse, which I do recognize it's not a formal term in any way. And the term that I use there is you need people that actually are PhDs with experience in deep learning, reinforcement learning, evolutionary computation. I don't think evolutionary computation is done yet. I'm a big believer there's still stuff that's going to come out of it. But things that will be less compute heavy will require less data overall. So answering your question, you're right. I wasn't very clear maybe what I was using finesse for. I do think there's place for that. Your question on revenue and team, I think, is absolutely spot on. Your answer, which is both matter over time and how you scale. I think one of the concerns we have in AI, I think all of us have alluded to it tonight, is applicability, right? What's the end consumer, end user, enterprise use case for this, right? What issue is it actually solving for, right? Now, it doesn't mean that it wasn't a group of academics coming together, that it's some really interesting stuff that they've done and they come up with something, but it can't be a company that takes 5 years to get any applicability out of capital intensity driven by their platform. That's very, very difficult. I think those days are gone. We've had a few plays like that in the past. I think those days are gone, right? Most venture capitalists at this stage would say, just show me what you're actually solving for.
Sure. Quick follow-up on that. So when it comes to your risk assessment, you can recruit PhDs out of top schools in the country, but you cannot make up revenue. So again, which one weighs more to you?
I think the thing I see the most missing in teams, in artificial intelligence teams that are like proper deep teams, that they have great engineering and scientific prowess, is product management. Single biggest issue, right? And sometimes you end up even have people that are actually good sales and marketing people, but you have nobody in between. You have nobody in the middle that can say, how do I productize this? How does this look like a product that I can actually give to my sales guy to sell, etc.? So for me, that's the biggest issue. That's the big rift. And I think, to your point, you do need to hire those guys. You need to have someone in the team. I'd say, in my opinion, in all genuine concern, the CEO should probably be that gatekeeper. Rarely it is, right? Normally the CEO is also one of the academics, or it's one of the engineers, or one of the scientists. There's nothing wrong with that. But you need someone there that's more business savvy, that's a little bit more focused on what the product's going to do. And I rarely see that in teams. Very, very rarely.
Thank you so much.
Thanks a lot for the insights. Couple of questions. How do you see the intersection of trends like decentralization, privacy, and blockchain with AI and artificial intelligence? Do you see opportunities there? The second question I have is, I'm the founder of a company that's building autonomous AI agents that's focused on customers, because most of the AI we see is beyond search and social, is focused on enterprise use cases on the sell side. But as a buyer of a customer, you want to aggregate your own data and get insights out of it, and you want to be brokered to the right type of knowledge and conversations. Those kind of agents really do not exist today because customers don't have access to their own data for the most part. So I want to get your sense on, is this too early, you think, or do you think we are right about on the cusp of a transformation like that?
I'm not sure I totally understood. Is it a customer care agent play, or customer service, or customer experience?
No, it's a buyer's agent. So so if you want to, for example, you are buying insurance and you want to find access to the best agents or the best brokers to talk to or the best companies to talk to, and you want to share your data, your form, your existing contracts in a way that's very private,
Yeah.
you'll be able to do that, push a button, and not only get access to the right content, but also have broker talk to the right people.
Yeah.
So you can see a lot of examples, other kinds of agents, or you could have a fitness agent that, for example, takes your Fitbit data, your nutrition data, and your
Yeah.
healthcare data. It correlates across it to get insights.
Yeah.
But these are focused on the end user or the customer. It's not for the supply side who's selling to you.
Yeah, I think so. The two questions. The first question on decentralization, effective blockchain, etc. I won't dwell a lot on that, but I would say there are clear use cases for the usage of blockchain in decentralization of information, identity management. So pretty well-known use cases. I think there's a lot of interesting things going on there. As I have always said, can you do it with some other technology? Does it need to be blockchain? Could it be a distributed database? Does decentralization actually matter dramatically or not, would be what I would be looking at. Is this a use case that's best served by this technology, right? But I think there's a lot of great stuff going on around identity management, sharing of data in the blockchain, which I'm fascinated by. The second piece on having something that protects your data, and basically puts it out there and moves it around. I'm a big believer in that. I mean, we invested years ago in a company called KeepSafe. I'm still on the board of that company, very focused on privacy. I think this is actually the right time to start exploring that. The key issue I would have with something like that is, how do you make money, right? Because you're sort of a federator in some ways. So for me, that would be pretty important. 2, is it really protected, the data, and how protected is it? And 3, what's going to be your sort of customer acquisition route and channel, right? How do you get to the end users for them to use your facility rather than others? Because I think it's going to be very difficult to just push it onto all the entities that are involved, because the entities have very little motivation to share information between them. So my hypothesis, again, I've jumped like 5 levels here, is that probably you need to get users first, right? And they want to push their data around. But I think there's something there for sure, yeah.
I think it sounds like it's hard to do that because to get users, it'd probably be easier if you had a brand first. So I don't know how you get that kind of ramp up and traction without having a brand.
Yeah, you do have a catch-22 though. Yeah.
Hi, my name is Swami, and this question on the healthcare. As you said, like the product development itself takes time, and the amount of trials, preclinical trials or even clinical trials, and the FDA approval. So it is a very lengthy process. And you guys also talking about get the revenue first, get the traction first. So without all these regulatory approvals, it is not that easy to go and get a customer, go and get a revenue. So as an investor in a tech startup, healthcare tech startup, what do you see, like how you evaluate, okay, this guy is going to really make it. And at the same time, that healthcare tech startup didn't have all the game in their hand. Some of them, they can play faster, but once you get into the FDA, they cannot accelerate that process. So how you see that tech startup is going to make or not?
Yeah, I think healthcare is one of the areas where, particularly if you're going after FDA approval, revenue is not necessary to raise institutional capital in the beginning. I think you have to show that your technology is accurate and high quality enough that it will get approved and that it's performing better than humans in most cases, at least as well as humans, if not better. And then I think the second thing is, healthcare data is very difficult to access, and having some way to get quality labeled data, whether that is a partnership with an institution. I've seen companies like research teams basically offering research to institutions in exchange for using their data to kind of build early algorithms. Like I've seen a mix of it, or providing a layer on top of an existing data solution. Like I think there's partnerships there that can provide a unique data moat that allows you to build your algorithms, which then you can then go to the FDA. So I think revenue. I think getting a proprietary data moat is and accurate algorithms is far more important in the early days. Because in healthcare, you're not really going to get revenue until you're approved. So.
One of the things we like to see is if you can show a paid proof of concept, and if you can get 1 and 2, and then you show you have a funnel for more coming along, then you show that you're getting value to your
So when
clients.
you say the proof of concept on the product, or some customer shows some interest on this?
On the product, so that somebody actually really wants to pay you money for the POC.
Okay.
A lot of institutions will pay you to build it too, as well, if they have a lot of confidence in the team.
Thank you.
Hey folks, I'm Yovi, I'm the CEO of Simpo, and I have a really quick question. How do you see AI affect digital transformation in the enterprise?
Nobody wants. I can try. I think the key problem with digital transformation is that it's very deeply embedded in organizations, processes, and systems. And so digital transformation that doesn't start there is sort of doomed for failure. Now, if you're addressing a very clear issue on digital transformation in that journey, or core digitization of a company, of a large corporation, that's very well identified, for sure you can fit in, because there's going to be someone who's going to put their budget to it. But in reality, normally, and I'm an ex-consultant by background, so hopefully, I'm okay in saying that, it's really a systems and process issue most of the times, and then an org and talent issue as well. And my experience, again, has been that type of massive transformation actually normally starts with very small entities, with small teams that are highly empowered to do stuff within the organization. Sometimes that have a very inorganic focus, like they're focused on business development, or that have some organic focus around product. So if you're trying to sell a product and there's little of that in that organization, I think it's incredibly difficult to sell it and incredibly difficult for it to have any impact whatsoever.
Can you address selling directly to the CIO versus specific lines of business or, say, a director of product?
Meaning, can you go different routes in terms of selling? Is that it?
So you mentioned, what I'm specifically addressing
you want to avoid, well, I shouldn't say this totally loud because there are incredible CIOs out there and incredible CISOs out there. So I'm overgeneralizing. But in general, you don't want to hit the CIO of the core entity, right? And I think some entities are now smart enough to differentiate the roles, right? There's a CIO that is like core digitization CIO, focused just on the company itself, and then they have some other person that has, the information responsibility for whatever new unit they're building together, et cetera. In general, I think you want to go to that other unit, to the guys who are sort of, but you have to make sure they're empowered. That's part of the issue. It's always then an interfacing issue.
So provided they're,
Yeah.
Provided their decision maker going line of business is actually something that you think is a good
Can be,
approach?
yeah.
Okay.
If the line of business has clear KPIs around digital transformation, changing, they have power, they have budget, absolutely, yeah.
Got it. Okay,
Yeah.
thank you very much.
So in this conversation, academia and PhDs have come up a lot, even more so than in a typical Silicon Valley emerging technology type of discussion. So my question, reflecting that point, is what are the innovations and developments happening right now in the public domain and at institutions of higher education that you think are really interesting and worth paying attention to? And any individuals from those institutions who might be worth following as well.
Stan has that report.
I'd say. I mean, it's the I think there's a hesitation for lack of knowledge, but there's also a hesitation because there's been an incredible brain drain I mean, we can't, we need to obviously remember where Andrew came from, Andrew Ng. Stanford, all of these schools, these people have migrated, right? And Google, Facebook, Amazon, a lot of these big corporations, and rightfully so, have basically taken this incredible talent. In Canada, you had the same thing, right, with the teams up there. So I think part of it is the hesitation is, obviously there's still fascinating things, I think, happening. But people really have this mandate. I was talking to someone, I won't name the company, but he's the VP of research for a very well-funded company, but he's still a professor at the university in the US. But he says, my sandbox, my playground is actually the company, right? Because I have resources, I can bring in my PhD students, et cetera. So in some ways, I think there is a dramatic transfer of talent that already happened in the last 5 years, and it's still happening. And the fact that the talent is so expensive now here in the Bay Area, for example, right now around these areas, makes the ripple effect happen in countries like France, there's Scandinavia, China for sure, that's sort of a given. So I think that's basically what's happening right now. There's a lot of this talent just getting out very quickly. Someone was telling me postdocs, forget about it. I mean, even PhD finalizing is difficult, but postdocs is very difficult to get postdocs these days. People that would accept to do a postdoctorate, right? Because they're like, yeah, I'm just going to make money now. Thank you.
If that trend perpetuates, do you see that as an impediment to the industry evolving at the rate that it could?
I don't think so, because I think a lot of the stuff that is happening in companies is very similar to academic innovation. There's a lot of papers published. There's a lot of these people participating in innovation that's relatively open. Now, is it as open as academia? Probably not. But I think the process by which this innovation is happening in companies like Google and others is actually very similar. I don't think it's that disparate from what would happen at Stanford, et cetera.
Cool. Very interesting. Thanks. Did you?
So the question was, what are some interesting things that universities?
In the public domain in general, with universities being one of the leading catalysts of the AI ecosystem, outside of venture.
I meant to avoid the answer, by the way.
I've seen a surprising number of machine learning professors and their student PhD research teams actually partnering with companies and the private sector to actually work on having someone do their PhD research, which is actually a real world problem. So it's kind of a win-win. And I think that's interesting because the students are actually getting, real world education, but also companies are able to benefit in a labor market where there's a shortage of talent. I've seen it in healthcare a little bit. I think in domains where there's much more public good that comes out of it, I think research labs are more willing to share talent that way. But I think that's one area that I think is interesting.
So maybe those public-private collaborations are the space to watch.
Yeah.
Awesome. Thanks.
I've heard recently there are 3 times as many computer science PhDs at Google than there are at Stanford.
Wow. Cool. Thanks.
So this is probably mainly a question for Kristen, but obviously you're all welcome to go for it. I'm wondering if you have any experience with or opinions on healthcare startups that test their product internationally, particularly in developing countries, possibly taking advantage of either public funds to treat whatever the disease is and/or research grants that test it there and then use that to try to clear the FDA or the C cert?
I think it'll be more challenging to get through, just for several reasons. The first is I think anytime you build an algorithm that's based on data that is not necessarily applicable to its current use case. So for example, if you're trying to build a self-driving car and you test it in China or India, it's probably going to be very different from the roads in the US, right? The side of the road pedestrians walk on, things like that would be different each, just everything. Signs, all that. And similarly, I think with different demographics, you could also run into different challenges, like responses to therapeutics, things like that. So I think it's probably going to be more challenging. I actually don't know the specific regulations on whether you can take a test from test it somewhere else and get it through the FDA here. But I just think anytime you can test it on the population that you're actually going to be selling to is probably going to be more convincing.
Gotcha. Yeah.
I don't know. Is that helpful?
Oh,
I don't feel like I answered it.
No, that actually gives me some real insight into it.
I think that's true though in all industries, not just healthcare. I think anytime you can test your product on your end population, it's going to be far more convincing for people to buy it.
Gotcha. Yeah, I was thinking about it just because we're trying to collect data that have not really been collected before, and figuring out some way to label it quickly. And we were just thinking going where the rules are a little more loosey goosey, and then.
I think if you're listening to the rules to try and get it approved, that so I think at the end of the day, the standards need to be the same. So if they're labeling data with the same standards, then it should be okay. And if the standards are a little more loosey goosey, then it probably is harder to get through.
Then anything trained on that is probably not going to happen here.
Yeah, I think if it's labeled incorrectly, you're probably going to get inaccurate or kind of lazier results from it too.
Yeah, I'm thinking more it'll probably be labeled correctly, but if it's the wrong images labeled correctly, that's still probably
correct.
Is problematic.
Yeah. I mean, if I'm not going to, if I'm trying to identify risk factors in adults, I'm not going to train data from children's risks. Some of the things like that. So I think anytime you're even if you're labeling data correctly, you could label a car, label a bunch of Volkswagens, and then try to go run an algorithm, on a bunch of Jeeps. It's not going to be
I hope that you're considering following the same ethical standards abroad as you would here in the United States.
Absolutely, yes, 100%. That's kind of the most important thing here, and I hoped that someone would ask that.
and apologies if I'm not being clear. I think
this is really good.
I guess I'm just not fully understanding the nuance of what you would be doing abroad.
I can see you after class as well, but it's mostly sorry. But in this particular case, it's oral cancer images, but we're kind of stalking Google because they're doing something like it with diabetic retinopathy.
Mm-hmm.
That's probably easier because people's eyes tend to look more similar across countries than people's mouths, for sure. So that's kind of, but yeah, it's mostly about diagnostics in some specific, body part, trying it out where there's a widespread need for it, and there are public funds going for it, in the hopes that the kinks will be worked out, and then it can eventually be applied to the U.S. market where there's more reimbursement but less volume. That's sort of the situation.
I would say as a general rule, try to get data that mimics the population you're going to treat.
On that note, let's give it up for our panel. Let's hear it for our great moderator, Stan Lewandowski.
Thank you.
Let's hear it for Mindroom, our partners, and our sponsors. And our event team and our video team. And let's hear it for the audience. Let's hear it for me. So you can stick around, network, socialize, and connect. As a courtesy to Mindroom, we would like to leave the building by 9 p.m. Check out the video, youtube.com/idea-IPO. Thanks for coming. We'll see you next time.